Welcome to the Real News Extra. My name is Fred. I'm the operations manager here at Relaw APC. And joining me today is the principal and founder of Relaw APC, Jennifer Felten.
Hello, everyone.
So Jennifer, please explain this new proposal from the Federal Housing Finance Agency in regards to lending by Fannie Mae.
Right. So when it comes to the concept of lending, the idea of conventional lending, if you've heard that terminology, conventional lending, that is lending that is done through the federal government. Okay. The federal government buys loans, right? Through the Federal Housing Administration, through Fannie Mae and Freddie Mac. So in this case, Freddie Mac has made a proposal. So this is a quasi-governmental agency, so proposing that they start buying second loans. So traditionally, conventional lending has been first, right? And these are sold to investors on the secondary market. So low risk, theoretically. Obviously, that's not always been the case, but theoretically low risk, well vetted, with a whole bunch of rules and regulations around them to have qualified consumers and then make it valuable, useful investments for investors. So adding seconds or lines of credit, this new type of financing, is a huge shift from a standpoint of how the government has officially and traditionally bought and sold loans. It's going to add layers of risk, right? A second loan is significantly riskier than a first loan. They're still only going to do it with lenders who they already work with, who qualify for the primary financing. And it's going to change who the investor base is. They're going to have to build new rules and regulations as to what qualifies and what kind of loans they can write. But the issue and where this is coming from is that there has been, with interest rates being what they are, lending is very challenging. So if I were to refinance my house, we would be looking at a significantly higher payment. If I need to get money out of my house, if I can do a second, then my first can stay at its lower good interest rate, and now I'm only paying a higher rate on this additional bucket. But second financing traditionally is significantly more expensive. Again, it's riskier. It's not going to be sold on the secondary market. So this shift would allow for seconds to be bought and sold in a more conventional way, and it means theoretically the interest rates will be a little lower for seconds and give homeowners an opportunity to access the equity in their house.
So what are some of the benefits of Freddie Mac purchasing the single-family closed-end second mortgages for the homeowners, especially in the current high interest rate environment?
Right. So if I'm a homeowner who has a nice, 2 or 3% interest rate loan, but I need some cash out of my house, and property values have not gone down despite interest rates going up. So most people have equity, right? So maybe I want to access some of my equity to improve my house or send my kid to college, right? In order to be able to get a second at a lower rate because the government's, managing it through the conventional market, I could get that money at a much lower rate and be able to access the equity that I have without having to sell or refinance my first, which would have significant financial impacts.
And what do you foresee as some of the long-term impacts on the housing market under this new policy, especially for first-time home buyers? They're already facing, pretty significant challenges due to limited supply of the market.
For existing homeowners who have equity, this is a great idea. For everybody else, this is a bad idea.
Okay.
Right? So if I'm looking to buy a house, one of the biggest challenges right now in housing, especially in a market like Southern California, is there's a lack of supply. So because interest rates have changed so dramatically in the last couple of years, anyone who has a low interest rate loan isn't selling. So our inventory from a real estate standpoint is extremely low. Unless you have what we call a triggering event, you're not going to sell. Right? For most people. So you're moving, you've had a death, you've had a birth, you're getting divorced. Those are triggering events. But absent those reasons, if I want to sell my house and go buy the exact same thing, my payment would be more than double if I went from a 3% loan to a 6% loan. Right? So there's the housing supply is depleted, very, very low, lowest we've seen in our lifetimes. And now these homeowners don't have to sell. They can get money out of their house, right? Like, it means less supply, right? So
Yes.
for first-time home buyers who are trying to get into the market and don't have equity that they're building, this means less supply, prices remaining high, right? All of those market factors that are pro-seller are going to be increased, not decreased by this plan. So it's going to help people already in the real estate market and be one more hurdle for people who are not yet in the real estate market.
Okay, thank you. If you're enjoying the Real News Extra, I ask that you please click on like or subscribe. Hit that little bell for notifications, and we'd love to hear from you. Please leave a comment on this video. My name is Fred. I thank you for watching the Real News Extra, and I look forward to seeing you on the next episode.